Hi everybody, it's Christopher from Serene Education. Just going to be going over the four majors for the first week of December. So it's the 30th of November through to the 6th of December 2014. Starting with the Euro against US dollar. Going to be looking at each chart at the weekly time frame just to see what happened the prior week. So it gives us an idea of what we should be looking for going into the 1st of December. Okay, so in front of me I have the Euro against US dollar on the weekly time frame. You can see that this is our fourth consecutive week now. We've not seen any further lows. So the whole of November, we've seen nothing but sideways movement at roughly the 1, 2, 3, 5, 6 and change level. You'll notice last week's candle, we saw the underside of the 23.6 weekly fib level being tested. However, by the end of the week, we saw price closing just above the 60% of that entire trading range. So notice the weekly fib level still above price here at 23.6 at the 1250, just above the 1250 mark. However, price is still consolidating under that level, and in order for us to see any further selling movement towards our monthly fib level down here at around the 121348 level, we would need to see the current monthly support, November monthly support level, being breached here at 12356 to give us any further selling opportunities. So this week in particular, going into the 1st of December, there's a lot of data out for the first week of a new month. We know that non-farm payroll comes out on the Friday, so we should expect a lot of data coming out from Wednesday, Thursday, going into that Friday. Interest rates announcements for the Eurozone on Thursday, and obviously we have non-farm payroll coming on Friday, so we should expect a lot of volatility leading into that. So ultimately for Euro against US dollar this week, would need to see 1235.69 and change being breached to see any further selling sentiment we've seen over the past number of months. So look for that to be breached this week for a continuation down towards that monthly fib level here at the 121348 and change. Failure to see this monthly support level being breached would ultimately see price reattempting the weekly fib level above us here, and ultimately if we get it back above that going into December, then ultimately we could look towards that 38.2 weekly fib level, roughly around the 1278 and change mark. But as it stands at the moment now, on two levels we need to see tackling further to see any further selling. Got to see the current support level being breached. If we don't see that happening, we could see further consolidation with the retracement being the outcome. Moving on to sterling against the US dollar. Here on the weekly, here again you can see this is the third consecutive week now we've seen a bit of indecision, and a third consecutive week where we've not seen the support level low being breached. So ultimately, as is the case with the Euro against US dollar, we are seeing a lot of negativity. Sterling is showing exactly the same outcome. You can see that the prior week's candle was a spinning top. That was happening under the weekly fib level here at the 38.2, which was the 157213 level. We wanted to see a decision candle after an indecision, and last week's candle we saw a lot of pullbacks on price. Price actually traded above the weekly fib level here at the 38.2, however fell to close as we saw further selling coming into the market, and by the end of Friday last week we saw prices closing pretty much where she opened up on Sunday evening past. So a spinning top yet again, or doji, but you can see that there's a lot of negativity on that particular pair as it hugs the bottom end of this candle, this range. However, you'll notice that there are support levels, a 3-week support level still in effect at roughly around the 155822 level. So going into the first week of December, we would need to see this current 3-week support level being breached to see any further selling to the downside, and we could look towards that weekly and monthly fib level here. This consolidation range has started to get into a lot of sideways motion, roughly around that 15376 level. There's still enough on the market on the actual table here, roughly under 200 pips or so, but there's more than enough here to actually capitalize if and when we do get a close lower than this 3-week support level. Notice everything's looking fantastic for further selling, but as I mentioned to you, as long as the weekly fib level over here at 157 stays above price and continues to resist price from pulling any further back, we would need to see the support level here below price being breached to see any further selling opportunities towards that weekly fib level to the downside here at 22.6. So that'll be our target for this week. Look here, moving on to the US dollar Swiss franc. Weekly here again, further consolidation. You'll notice that we had a lot of action, price action over this last prior week, and you'll notice that at the end of it we still have failed to break the prior week's high, which happens to be the monthly fib level here at the 76.4 at 0.9695. You'll notice I actually plot both the 76.4 and the 78.6. I've noticed a lot of people who don't say 76.4 is a fib level. However, I like to keep it on because a lot of people out there still tend to use it, and I tend to actually code the two levels between, and I'll treat this with a lot of respect. So you can see prices trading within that particular range, and if I just pan out here, you can see how much consolidation we've had in this level here over the years. So I'm going to give this a wide berth, looking into the new week with US dollar, US non-farm payroll figures coming out this Friday. Would like to see ideally the 76-point level being breached for any US dollar strength, and above the 96.95 would be a very good opportunity, because we haven't seen price getting above the level for quite some time. And if we do get above it, then we could head towards that 100% level up here at the 0.99647 level as a potential target going into the last of December. So there's more than enough on the table there, roughly around the 269 pip level between these two levels here. However, we're not going to get all of that, but there's more than enough, as I mentioned, to actually see a decent return on time invested. So here again, this week, what we would like to see is the US dollar continue her bias to the upside against the Swiss franc. If that's to maintain or to be the outcome, we would obviously like to see the last 2-week high being breached to get a safe entry into that to the upside. So look for further bullish sentiment to the upside to capitalize from that. So looking towards non-farm payroll this week to give us an ideal opportunity. And just looking at those particular figures, the non-farm payroll, you're looking at adding roughly about another 13,000 jobs to that level. Unemployment rate, they're expecting no change at 5.8%. It'll be interesting to see how that comes out. So that's going to be our main target this week going into the first week of December. US dollar Japanese yen, we're going to finish off with. You'll notice that the last week, in fact, the prior week, apologies, we had a spinning top. Still making higher highs, which is the most important, but you'll notice there's a hell of a lot of difference between the prior 3 weeks going into the last week of November. You can see a spinning top over here. However, you'll notice this week over here still moving higher, but saying that has failed to close higher than the prior week. And if I drop down to the daily, you can see that price last week spent most of its time just going sideways, not making any new highs and not making any new lows. You'll see the candlesticks are all very much painting upside movement. So therefore, here again, if we do see any further favorable news for the US dollar for the first week of December, you would expect price to continue her rally to the upside. For that to give us a clear entry, then ideally we'd like to see price trading above 118.98 and change. It'll be actually like to see a breakout of this consolidative range that we've seen through the last week of November. Notice the indicator box over here is primarily telling us we should be looking for further longs. But until such time as we get a breakout here, we shouldn't be even contemplating looking high. But if we do get a break above this consolidative range here, we could be looking towards a 124.049 for December. So that'll be our first target through for December. But as I mentioned too, most importantly, we do need to see some bullish breakout bias to the upside to give us that entry. So as it stands over here on the 4 majors, we're going into the first week of December. That means non-farm payroll. So from Wednesday through to Friday, you expect a lot of fundamental data to come out. Please be vigilant, guys. If you are trading and you are new to trading currencies, the last thing you want to be doing is trading a lot of speculative volatility out there. Rather leave it to the guys who've been trading for years. Rather stand aside, look what the outcomes are on those particular data, Forex data announcements, and then utilize that to move a trend, and then it'll give us a fantastic opportunity to trade the outcome. So there again, if you are trading any particular template, please ensure that you are using the correct money management rules. Very, very important, as I always keep mentioning. You might have the best strategy template in the world. However, if you aren't backing it up with the right money management, it will bode you or come to nothing. So please, please, please manage your accounts correctly. I'm going to leave you with that. I hope to see you guys on the forum. But if you are trading this week, please be vigilant. There's going to be a lot of speculative movement. There's a lot of data out for the first week of a new month. In this case, it's December. So please be aware of it. Hope you have a fantastic week. Keep it simple. Until then, you guys trade serenely.